Joining us is Director of Budget Policy at the Heritage Foundation, Richard Stern, and economic strategist Francis Stacy. Welcome to Newsmax Wake Up America Weekend. So we know the Fed chair is coming under fire for cost overruns or renovations to the Fed headquarters. This was, I think, the best television I've seen in a long time, that exchange between President Trump and Jerome Powell. But Trump decided to drop by on Thursday. Let's take a look in and listen.
So we're taking a look, and it looks like it's about $3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed.
Yeah, it just came out.
Our notes had it about 3.1 as well.
3.1,
3.2.
This came from us?
Yes.
Are there things the chairman can say to you today that would make you back off some of the earlier criticism?
Well, I'd love him to lower interest rates. Other than that, what can I tell you?
Pretty rough and awkward exchange there with the president and Jerome Powell. So, Richard, have you ever seen something so dramatic around the Fed? I mean, this was the president of the United States touring, talking about the budget overruns.
Look, it shows you what kind of a negotiator-in-chief Trump is. He's actually made the Fed an interesting topic of conversation. And I got to hand it to Powell for finally becoming a meme and providing some service to the country. But look, the president's right here. Powell has been political. When Joe Biden wanted cheap credit to fund the Green New scam or to try to win re-election, Powell gave it. And today, Powell's silent when we should bring rates down.
Yeah, so we've got Francis in here. Francis, what do you take away from that exchange between Trump and Powell? I mean, ultimately, there are expense overruns on this project, and the president is making the case. They asked him a question, explicitly, in their private sector world, if a budget ran over this, what would you do? And he said, I'd fire the guy.
Right. He would fire the project manager. I think they've been a victim of inflation because the construction's been protracted, as anyone else has. But what's interesting about the Federal Reserve is if you go to the Section 7 of the Federal Reserve Act, you see what happens to the money that they take in on the interest payments. They pay all of their expenses, and then they pay coupons to their bank shareholders. And so there's a little bit of an interesting thing going on because Trump is saying he'd like to lower rates because he basically, that costs. At one point, he threw out the number $900 billion. We've got so much short-term debt to refinance in this country, and it costs the taxpayers a fortune. And then when you look at where it's going, Trump has some ire because not only are they paying coupons to the banks, their shareholders, but also these renovation costs are exorbitant. So. Yep. That's what's behind the chemistry, if we'll call it that, with the exchange.
or lack thereof. But let's talk about investments as well, because stocks are still shrugging off tariff concerns and continuing their record run from what we can see right there. All major averages are up double digits since April. So, look, what could possibly stop this from happening, Francis? Is there anything that could get in its way?
Well, certainly. The thing about the stock market now is it's based a lot on volatility and flows and other metrics than fundamentals. So you have extended valuations. But the thing about calculating the appropriate price for stocks is you don't have a final number to punch in that calculator without knowing with certainty where the trade deals land. And so unless there's a catalyst to redirect this momentum, I see the stock market continuing to go higher until we have some other number to plug in.
Yeah, makes sense. Now, Richard, we know the president signed some record deals just this week with Japan and others. I mean, are these tariffs long-term? Is this strategy, it seems to be working in the short term. Is it going to continue to work in the long term, in your opinion?
Well, like anything, tools can be used constructively or destructively. If you're using tariffs as a short-term negotiation tool, they can be great. And to your point, the president secured investment into the country. He's opened foreign markets for U.S. exporters. And that's all great. And if at the end of the day we bring the tariffs back to where they were before he started negotiating, then it's a win-win. But if the tariffs stay in place in the long run, it's important to remember that a good 60% or so of our goods imports are actually imported by businesses in their process of doing business. In fact, most of that goes right to U.S. manufacturers who then turn those, basic parts into more complex machinery and end consumer products. So, it's important that the president negotiate, but it's important that he gets back to a zero tariff regime after all this.
Yeah, that makes a lot of sense. So we do know the president is reportedly finalizing an executive order that is pretty monumental. It's going to allow you to actually take your 401k and invest it in private equity and not just the usual stocks and bonds. What are your thoughts on this? Let's get your thoughts, Richard, on that.
Yeah, so I think it's a great idea. I mean, there's certainly extra risk, and we've got to be careful. But, at the end of the day, it's important to remember that really it's your money. You should be able to be free to invest it however you want. The fact that we pay capital gains is, frankly, a very bad tax at all. So, in these tax advantage accounts, your retirement accounts, you're actually looking at what should be the tax rate on all investments. And when the government cherry picks what you can invest in and not pay taxes, it's actually the government directing where that money goes. By opening it up, the private equity and some of these other things, it actually opens these retirement savings up to be invested in small and startup businesses. So that's great.
Makes sense, Richard. Francis, I want to get your opinion on this new move by the president. About 20 seconds before we go. Is this a good idea?
This is a good idea. Not all private equity is created equally, and so there's some additional risk with people's retirement. But if you think about back in 2000, we actually had 5,500 publicly traded companies. It went all the way down to around 3,000, and now it's kind of creeped back up to about 4,000-ish publicly traded companies. So you have less public companies. So where the growth is happening is in private equity. But you also have a bubble over there. Private equity is illiquid, so sometimes you can kind of get stuck, but it's a good idea.
We'll keep following the idea. Richard Stern, Francis Stacy, thanks so much.
Thank you
as always.